but there were over 5,200 private plan applications submitted by unique employee IDs in the state of Colorado. And all of that was happening sort of last summer up until that October 31st key deadline. Some trickled in after that, and we'll talk about why that deadline was important. But certainly you can go private at any time, and we'll talk about how you do that too if you don't like the decision you made for 2024. So of those 5,200, a little over 5,000 have already been approved or are in a pending status. There were some denied. The main reason the state was denying applications, if this happened to you, is because in order to get your plan approved, you had to demonstrate that what you were offering was equal to or better than what the state required you to offer. So if you weren't able to demonstrate that, you were not going to get your private plan approved. So some went that route and were not successful, but the vast majority got approved. And as I alluded, over 4,800 of those 5,000 went the insured route. 130 or so remained self-funded. Interestingly enough, I personally, along with Rich, helped implement 2 of those 132 self-funded plans. So very unique and the right decision for those employers to make, but just certainly not the norm. And what those 132 companies found, if you are among the 2 on the phone that did that, is that the carriers probably weren't quite so sure how to do that for you. And there's a reason for that. It's because the other 4,800 of their clients were doing it a very different way than you are. And that posed some challenges early on that we learned. They weren't quite sure how to handle this for self-insured partners like you. We're getting there, we're getting better. But if you felt like your carrier didn't quite know what they were doing, this hopefully explains why. They're not doing it for very many clients. Carriers might only have 1 or 2 like you, and the rest are all fully insured and very much more turnkey than what you were probably expecting. So hopefully that helps shine some light on potentially an adverse experience that you were having. All right, I want to talk a little bit about refund here in a moment, but before I do that, I'll just pause. Did any questions come in through the chat, Anna, on just the high level numbers? Okay, fantastic. So I mentioned earlier that there was a pretty key deadline of October 31st, Halloween, to submit your private plan application if that was the route you choose to take. The reason that deadline was important is if you were able to submit your application, not necessarily get it approved, but get it submitted by that deadline, you were eligible to a refund of all of the family premiums that you had been paying during the 2023 calendar year. The state basically said, hey, you went private. We don't need this money from you anymore. We're going to give it back to you. Now, we can get into detail on what you're required to do with that money once you get it. What do you get to keep? What do you have to share back with your employees, etc. But I think the bigger question here is, who's wondering where their refund is? And on the pre-survey we did, I think only a couple of you received your refund, and the rest are all in a state of waiting for it. And that is also not a surprise. So this, I think, will paint hopefully a very interesting picture for you on why you might be still waiting for your refund. And then we'll talk about what you can do to expedite that process. So prior to March 1st, and we'll talk about what changed on March 1st, there was almost $240 million in family premium refunds due to almost 4,800 unique employers. That was the balance due, if you will, as of the end of February. So you are likely one of those 4,800, and your money is likely somewhere in that $238 million. Now, that was how much was due in total. They had only paid out 91 million of the 239. So, and it was a little bit on a first come, first serve basis. So if you happen to get your application in really early, like in May or June or over the summer, you probably got your refund sooner. If you were one of the thousands of employers that submitted your application days before the deadline, there's a good chance you're in that second set of numbers at the bottom, which is, 100 and almost $150 million still due as of the end of February. Now, the reason this process was taking forever is because if you may be aware, there is an obligation to refund money to employees who have since departed your organization. Um, and the process to do that proved to be extremely difficult and extremely cumbersome. The state, in an attempt to be helpful, said, "We'll take care of that for you. We'll wait to give you your money. We'll pull out what's due to your separated employees. We'll work with the Treasury Department, much like they do for unemployment, and we'll get that money to them. You don't have to worry about that. And once we do that, then we'll give you the rest of your refund." Well, best intentions, right? That proved to take a very, very long time. And the state realized it was holding up their payment of millions of dollars of refunds because they were trying to administer this payment to the terminated employees first. So on March 1st, they said, we're crying for help. We know we're not doing this very well. And if you want your refund sooner, we'll now give you the whole amount, but you, company, you are now responsible for tracking down all those terminated and separated employees and refunding it to them. So if you want your money sooner, you just have to agree to do that process on your own. Or if you don't mind waiting for your money, the state will, in theory, eventually take care of it for you. So since March 1st, they've issued another 28 million in refunds. So they're getting there, but there's still 120 refunds due. So presumably those employers um, have either not applied for their full refund yet. Maybe you weren't aware there was an expedited process, so we're here to educate you today, or you're willing to let the state handle it for you and just wait for your money. Um, but I think the point being is if you are anxious to get your refund, if you're a larger employer or have a decent amount of employees in Colorado, that refund amount can be sizable and can certainly improve your cash flow as you're starting to pay premiums and benefits potentially if you're self-insured already in 2024. So there is an expedited process to get that money back. We can put some information in the follow-up and in the chat for you on how to do that, but just be prepared that you're going to have to track down those terminated employees. The good news is the state is so far behind that they're not going to be really auditing you to make sure you're doing that in a timely manner. It's a little bit of a good faith effort that you will track down those terminated employees and get them their money back. The only other comment I wanted to make on refunds, because this often comes up, is if you implemented a private plan that is fully insured, which again was the vast majority of you as well as all of Colorado, you do have to refund the portion of premiums paid by your active employees back to them. If you are among the small number of companies who chose to self-insure your private plan, you do not have to share your refund with your employees. You can choose to keep it all, minus the terminated people, and use that to offset plan expenses going forward. So that's a little bit of the nuance that came in a little bit late in the game that threw a wrench in everything. But that is the
Courtney,
current.
I wanted to,
Did
sorry
some,
to interrupt you there. I wanted to just jump in and add a one layer of detail to that.
please.
It was a unique advantage to the option of self-funding in Colorado, and that basically the program was the legislation was structured such that if you're self-funded, you could build an appendix to your plan document that stipulates we as the employer are going to keep all the contributions from 2023, even the ones employees made, and we're going to keep them as an organization. So they basically gave a loophole to the self-funded option, but self-funded employers, if there are any other of the 132 that are in our couple of clients on the line, If you didn't include that appendix in your policy and get it approved, then I would not recommend keeping the refund.
Good point. Thanks, Rich. And if you don't know the answer to that, oh, this is going to pop up in a million pieces. Sorry. If you don't know the answer to that, we can help you find that language pretty quickly.
Yes, absolutely.
um, okay, now that I've built this out. So I want to transition now into what we are experiencing, which likely resonates with what you're experiencing. But before I do that, were there any questions on refunds that came up while we were chatting? Okay. So I'm going to ask Rich, since he's been on the phone with all of the carriers and all of the state offices, to talk about. We're going to talk first about what we've been experiencing with private plans. And in doing this, we'll hopefully answer some of the questions you all submitted in advance. And then we're going to talk about the experience with those that we're seeing with the state. Because the question you might be asking yourself is, is the state doing this better than my carrier? Or are there any carriers doing this better than the state? And that's what we're going to try to answer now in this next section. So over to you, Rich.
Great. Thank you, Courtney. So we've learned a lot since the first of this year, and something that we take some pride in here at MJ is that we track very meticulously every time an escalation occurs with our clients where we support their private plan to understand what are the trending issues with all carriers in the private PFML space. What's the root cause? What solutions are they deploying to resolve those issues for our clients so that we can more effectively manage these issues um, for all of our clients? Now, what we've seen in Colorado, and I will say this aligns with what we've seen in other states that have recently gone live. And thinking states like Oregon is customer service deficiencies, by and large, the number one category of administrative issues with private plans. So, and a lot of these issues are kind of like the ones that kind of make you snap your fingers and say, "Oh man, like such a small issue. Why does this keep coming up?" So, what I'll say, one is that the carrier representative, say for a fully insured plan, upon intake, may direct the employee calling in back to the state to file. So this is kind of an unfortunate employee experience right at the beginning of a claim. The employer provides them the information correctly to file through the private plan carrier, and that carrier representative says, "Hey, you're calling the wrong place." Obviously, that causes some headaches, and you as the employer will hear about that, and it comes full circle. So to kind of unpack that one a bit more, one of the bigger drivers of that issue that we've seen, and something to consider if you are in a private employer currently, is simply whether your organization goes by more than one name. You may have a few accepted DBAs that employees refer to your organization as. If your carrier is not aware of those and isn't able to kind of attach them to your profile in their system, then their representatives may not know, and that may be the driver for the incorrect sending back to the state, if you will. Now, what else? Eligibility misdetermination. So an added layer to putting a private plan in place is that employers need to, for each claim, confirm a few pieces of information for the carrier so that the carrier can determine eligibility, determine the weekly benefit amount, process the claim. So whenever a claim is filed, the carrier will send that employer verification request to the employer. Now, what we've seen is in some cases, ultimately the benefit amount being misdetermined or even eligibility altogether being misdetermined. For example, you employer are not eligible when in fact they were. And sometimes this comes down to issues with what's been completed on that employer verification. Say maybe not all the historical wages were captured. There was an error in the submission, or not all the historical work hours, what have you. If the carrier doesn't get the complete picture via that verification, they may make a misdetermination. The employee will notice, and then that tends to come full circle. So it's another one we've seen. Last one here in this category is just training needs. I mean, and this is going to apply for the state as well. No matter the state, no matter how many years or months in advance a program can be prepared for, when things go live, that program needs to align and interact with a number of other systems and processes that have been in place for some time. And training needs is a consistent need in terms of our carrier partners. The representatives just not quite knowing, how to refer to the benefit, Colorado family, Colorado paid medical leave, et cetera. Just getting consistent in that regard takes time. Um, Another big one was portal challenges. So this one is a bit frustrating, and I will say isolated to a few of our carrier partners. I'm not going to name any in particular, but we saw some systems not quite be prepared to refer to paid family and medical leave as paid family and medical leave, if you will. We saw in some cases either the portal populating those claims, calling them short-term disability, or generating a duplicate. So there's one of each. In some cases, those clients didn't even have short-term disability with the carrier, which of course raises one's eyebrow. So a bit of a quirky portal issue we saw there. We also saw data appear, disappear, access to dashboards kind of be inconsistent, at least in the first month or so, which I think we've seen some resolution to. There's also an administrative aspect to that trend of the STD claim getting opened for clients that have experienced that. When it hasn't been caused by the portal, sometimes it comes down to, again, a training issue where the representative supporting that employee during intake misdetermines which claim type needs to be opened. Reimbursement model. So a good, at least half of the private market in terms of the carriers offering fully insured paid family and medical leave in Colorado, they offer what I refer to as an employer reimbursement model. So let's say you as an employer have you offer a generous paid parental leave policy, say 12 weeks at 100% pay, and you don't want your employees to experience a delay in pay when that leave begins. There are certain options available depending on the carrier for you to continue paying out without reducing the inevitable Colorado family benefit, and then for the carrier to reimburse you as the organization once that claim has been approved, all the documents been submitted by the employee, et cetera. It sounds great on paper, but in practice, we saw some hiccups just in the kind of getting used to how that works. The way it works well is that the employer needs to indicate it up front that they intend to utilize the option, but then each time that employer verification is sent with the filing of a claim, the carrier will confirm, do you expect reimbursement for this claim or not? And we saw some instances where an employer would say, no, I don't expect reimbursement. We're not going to pay this one out, but then the carrier didn't kind of follow suit with their responsibility. So not kind of aligning in terms of what's agreed upon with that service. Employer statements are, again, what I'm mentioning. Each time a claim is filed, that bit of information the carrier asks the employer for related to that specific employee. It's a it's a one, two couple page document the employer goes through, they complete it, they submit it. The claim really cannot progress until it's received. And the painful part is we've seen this has been one of our number one trends. The employer complete it, submit it either via the whatever means the carrier has set up, be that portal or email to a certain alias, and then some time will go by and the employee will indicate to the employer the carrier says they need something for you to proceed, and the employer frustratedly would say, well, I already submitted that on this date, carrier, here it is again. And we've seen that cycle happen a couple times, which, put yourself in those shoes, and if you've experienced it yourself, it's obviously a frustrating thing to go around and then also be viewed by the employee as the source of the kind of roadblock in that claim. So we've spent some time figuring out where those issues are coming from. Root cause is something we're very focused on, and it comes down to firewall in some cases. So what I'll say in terms of that issue is, as soon as you kind of catch wind of it coming up, look into it from a firewall capacity. And that seemed to help. Now, I mentioned we track meticulously our escalations across all carriers anytime a client issue comes up. And speaking to the data we've collected in Colorado based on our client escalations year to date, just to give you guys the top three carriers in the private market so far based on our data: New York Life, Principal, and Sun Life. Anything to add, Courtney?
No, I think you've lived this every day, so I know it's been painful. And any before we transition to experiences with the state, any questions or any unique challenges any of you have experienced that you'd like to share with the group?
Please, I strongly encourage any state or private stories of kind of what you're encountering.
Hey, this is Jessica. Can you hear me?
Yeah, hey Jess.
Hi, how are you?
Good.
I haven't just in the interest of contributing here, I haven't had many issues. We are very small, but we did have one employer who went through the state, so we opted to send them directly to the state. And the process online, I thought it'd be kind of similar to filing for unemployment, which it was for her experience. But she did find that when she put in the dates for her leave, she wasn't able to alter them until she actually went out and had the leave, and this was for pregnancy. And she just wasn't sure on what the cadence would be really for receiving kind of the money, and she's out on leave right now, so I'm interested to get her feedback when she returns, but I did look into working with, a private plan, so I think we're probably gonna switch. So, minimal experience, but enough where this is helpful and needed, and thanks for coming on today.
Yeah. Thanks, Jess. And that's a great segue to is the state doing this any better than the private plan carriers are? Oops, excuse me. So let's go back. I lost my slide. Where did it go? Here we go. Um, can you guys see that now?
Yes.
Okay, sorry.
So is the state doing this any better? It's an important question to ask. I mean, we had very specific feedback for the private plans, and you may think, looking at this list, wow, he really picked them apart. Why would anyone choose to go private? I want to be very clear. We help many more clients. We're very focused on private plan clients. So the state plan issues we hear much less often. So we're obviously going to have more feedback in that regard. And I also will just say that those issues we talked about with the private plan, while they are issues and they would disgruntle any reasonable person, employee or employer, they're manageable and they are constantly resolving. So I want to just be clear about our experience so far. Now, the state, they are continue to, I want to say, dangle the carrot of this HR portal that they will be coming forth with. As far as I understand in my most recent update, I'm trying to stay as updated as possible here. Um, their HR portal is still under development, and it aims to provide more visibility for employers into specific claim information and status. So, at a very high level, that's what it seeks to do. For now, as an employer, you're likely getting snail mail, physical mail for each claim. It may be overwhelming, it may be burdensome. I've heard for some claims it could be quite a lot of paperwork that comes through the mail. Um, but I do want to be clear that they are looking to modernize, and this is exciting. This is good news. I always like to compare state programs at large with what's going on in other PFML state mandated programs, and not every state program has the luxury of having an HR portal where you can dig into an individual claims information, say benefit amount, say approved dates, etc. So even our longer standing programs like Washington, et cetera, they still struggle with this. So shout out to Colorado for working on this. Unfortunately, it's just not quite ready yet. Integration with other benefits and leave entitlements. This is always a challenge. Think as an employer, say an employee, say you as an employer agree with your employees to allow them to supplement their Colorado family benefits up to 100% of their regular wage. By the way, that's how the regulations are set up. It has to be a mutual agreement between employer and employee, and if it's agreed upon, then the employee can top up only to 100% of their normal wage. But when you don't have real-time visibility into the status of their claim, when was it approved, how much are they making on a weekly basis, it adds blind spots to the process that makes supplementing accurately, for example, difficult as an employer, and rectifying an incorrect top up amount can be tricky as well. So, of course, this is something that will improve once that portal goes live. In terms of phone hold and handle times, they are elevated in terms of month over month. Colorado's releasing some pretty granular data, which is appreciated. And while they are elevated in terms of hold time, and I believe the average call duration as well, I do want to give Colorado credit that the average hold times are significantly lower than some other states. Even some older states like Washington, like significantly lower than Washington even. So I will mention that. Training and communication challenges, mentioned it on the last slide. This is it's tricky for state representatives, same as it is for our private plan carrier representatives, in terms of conveying the new benefit, considering the eligibility criteria, and really correctly administering. So something that employers, regardless of if your state or private, are working through.
Right. And then we had a question come up from our friends at CoBank.
Great. Hello, friends.
The question was, have you heard if the state is planning on modifying or enhancing the current ER portal?
That's a great question. Modifying or enhancing the current ER portal, the My Family Plus portal, it's not, I haven't seen a clear indication of whether their intention is to put this HR portal into it or keep them separate. Personally, putting myself in your shoes, I would hope that it would be an efficient process. However, if they choose to store those portals separately, then things may not change in My Family Plus. You may just have access to a separate portal. I saw another comment come in as well.
Yeah, it's from Linnea. She said a couple of comments to share.
Please.
Yeah, so I just spoke to family yesterday and was told that the HR portal is supposed to go live next month. But when I asked if employers are going to have the ability to respond online to claims, she was not sure if that's going to be part of the portal at this point. And the reason why that's so important for me is I get notices. I have a state plan, but the problem is University of Colorado Foundation gets mixed up with University of Colorado employees all the time for unemployment and now for family. So I'm constantly getting employees apply for family under my umbrella, and the emails that are incoming I cannot respond to. So I am filling out letters and relying on stale mail to respond to all of these, to say that these are not my employees. And so that has been a very cumbersome process. And, unfortunately, when I appeal or file a grievance, it's crossing in the mail with them reporting hours, and it's very cumbersome. And so I'm hoping that the HR portal goes live very quickly, but I just was sharing the experience with the state, since I have actually been through that now.
That was an extremely helpful update. Thank you for sharing in terms of the timeline, but also what you're experiencing. I'm curious if anybody else currently with the state plan is experiencing similar. Right. Any other
I'll
questions?
keep going.
Let's do it.
I think that's a great segue into our claims actually getting filed with the state. Yes, they are. This data, I believe, is through Q1, so through all of January, February, and March. We get data a little bit on a lag, but nearly 46,000 claims, and this data obviously comes right from the state's own self-reported data. You can see the vast majority of those are self-service, filed by the claimant or employee themselves. And if you look at the sort of the bar graph on the right, the type of claim, it's really almost an exact tie between medical claims, so the employee's own medical condition of any kind. And the second, big bar there is parental bonding. So somebody asking for time off to care for they are a new parent, or or they were a parent last year, because that bonding can still be taken. And then it really trickles down from there to care for another pregnancy related, actually, quite small, the safety related, I guess, positively quite small, and then a very, very small contingent of military claims being filed as well. And you can see on the lower right, I mean, 17,000 are still active, 15,000 were shorter in duration and have already closed in that quarter time period. And then you can see, those pending, denied, etc. So just a glimpse into the activity happening at the state level. And then in terms of claims actually getting paid, yes, they are too. So over 150,000 payments issued, over 140 million in dollars paid out. I think it's interesting that the average payment is about $936. And again, it's income based, and it tapers off at those Social Security maximums. So that just as a reminder there. But again, the number one payment category, so we talked about claim filing category, the number one payment category is on that parental side. So the family leave side of this act, more so than the medical leave side of this act, which isn't all that surprising to Rich and I, because if you think about it, I mean, most employers have some form of paid time off for medical reasons already, whether that be good old-fashioned sick pay or a short-term disability program. Not all as many, and many don't have any sort of true parental leave or bonding leave. So this was clearly a need for many, many Coloradans, and good to see that that's where the vast majority of claims are getting paid. Samantha, did I see you raise your hand?
So you totally did. Sorry, we are not Zoom users, as you know, and we were having issues seeing all of your slide with like the photos at the bottom, and we couldn't see a lot of your beautiful charts. So now I'm playing with all of my viewing options so I can see all of your slides.
Okay. And I'm more than happy, Anna, if you want to send this out afterwards.
Absolutely. And we're also, for the first time, we're also recording this, which we never do for the roundtables. But we are recording this, and we'll send the recording out as well.
Okay, thank you.
And then the last bit of state data we wanted to report, Rich alluded to this, is just the state tracks call volume, average speed of answer, hold time, etc., into both their employer contact center, which is the line you can call, or the claims contact center, which is the line the individuals can call. And no surprise, based on the numbers I just shared with you, the vast majority of calls are coming in from the individual into that Tri-C, the claims contact center. And you can see how the call volume has fluctuated, and increasing big time in March relative to the other 2 months. But again, still good to hear, Rich, that this is still better than others, although not great, but not horrible at the same time. All right, so in the time we have left, I really want to pivot to some lessons learned and some best practices that hopefully are a bit practical to some of you on the line. So we've learned a lot, you've learned a lot, and hindsight's always 20/20. So what are the things that, if you're not already doing, that we strongly encourage you to consider doing now? Number one, hands down, is a need to train your own managers and people leaders. I think the industry collectively underestimated the need to train beyond your HR team. I know I've spoken to some of you personally about, you may not even know that somebody's going to be out until the day they don't show up for work, because there wasn't really any training on, hey, if you're going to file a claim with the state, or please tell us too, so we can plan for your absence. If you're in a shift job, we can cover your shift. so that managers know what to do when they're being told that someone's taking time off under this new law. So we've been spending a lot of time since January going sort of back in time and conducting training for HRBPs, line managers, you name it, just on what to expect for people who work in Colorado that may now have the ability to take time off, because there's nothing worse than finding out someone's going to be out for 4 weeks, 6 weeks, 12 weeks, the day they go. So there is a way to get ahead of that, and that's through training. The other big one is, and Rich alluded to this, is there is definitely a need to review and more than likely change your existing leave and PTO policies that you already have, whether that be good old-fashioned PTO sick time, whether that be family leave, maternity leave, paternity leave, etc., to prevent the unintended consequence of stacking and doubling down on leaves. And I know a question came in ahead of time on this, so I want to spend a moment on it. We all know, or many of you know, that you cannot require someone to file a family claim. You cannot require that. You can, however, highly incentivize them to do so. And you do that by essentially changing all of your other leave wording such that you will pay, assuming they are going to get family leave too. So that's a really quick way to make sure people file family claims. If you're going to only reimburse them under short-term disability or paternity leave or family leave for the difference, that's going to avoid their ability to collect one and then collect the other and then be out for 20 weeks instead of 10. So some very simple policy updates that can be made there that in many cases weren't made, and employees found that loophole really fast. So again, an area that you might want to crack down on. And you can also require advance notification in your policy. So again, don't allow that employee to just call in one day and say, hey, my family leave started today, I'll be back in 12 months or 12 weeks. You can actually require through your employee handbooks and your other policies that they tell you and that they tell your manager in advance, so that you're not stuck in that situation too. Same thing
Hey,
with your
Courtney,
disability. Yes.
I wanted to pause you. Mo chimed in the chat and just asked if you could repeat that language that you just alluded to in terms of how to tweak that policy, maybe at a high level. And Mo, I think you're referring to something like, our so and so internal policy is you're entitled to benefits less any other income replacement benefits you may be eligible for. Like, Courtney,
Correct.
let me know if you disagree, but I'm thinking that you probably
Yes.
want to have something like that. Less
Yeah,
eligible benefits.
and so I'll repeat that. And April just chimed in. Thank you, April. The disability carriers in many cases already did that. Now, whether they told you or not is a whole other matter, but the disability carriers already, in most cases, are going to reduce what they pay somebody on short-term disability for what they would get under family, regardless of whether they applied for family or not. So that's what the disability carriers are doing, and I don't blame them, because if they're insured, that risk is on their plate, not yours. And so they're gonna pay less, assuming that person files for family, which again creates that motivation for them to file for family. You can replicate that same practice on any internal leave policies you have. So think maternity leave, family leave, parental leave. If you have policies like that, you can replicate that exact same approach and say, you're still eligible for this stuff. And in some cases, we'll let you top up and get up to 100% of what you had ahead of time. But we're going to reduce what we pay you by assuming that you are getting family too. That's the way to motivate people to file. You can't require that they do, but that certainly adds that extra incentive. Does that help, Mo?
Yes, thank you.
Silence means yes.
Yeah.
Okay, great. And yes, April, many carriers did that and didn't tell us. So now we know, and now we actually think that's a best practice that although they should have communicated it better, it makes perfect sense, and we would recommend you all do the same on your other policies. Okay. Staying up to date on the program, I think Samantha at CoBank alluded to this earlier. The state's site has a lot of great information. Certainly, if you're working with carriers, an absence management consulting partner, whether it's us or somebody else, lean on them, lean on us. Where our job is to keep you informed when these things change. The state also updates their employer guide. We've included the link here, which you'll get when Anna sends this out. And there is a Colorado Family newsletter that you can sign up for. And that's hopefully when that new portal goes live, they're going to blast it in that newsletter and you'll all know about it. So definitely stay up to date on those developments. And then finally, employee notice poster compliance. I don't know how many reminders went out about this, but sometimes they're still not there. So if you're with the state, you can get that sample notice using this link, post it, make it available electronically, whatever your notice requirements mandate. And then if you're private, you can get your carrier's private plan notice for posting if you haven't done that already. All right. And then it's not too early to start thinking about 2025. So we should all expect some change. And we should know about these changes hopefully in the fall. Sooner would be nice, but hopefully by the fall. The big question is the 0.9% payroll contribution rate. Is that going to stay 0.9% or is that going to change? There's some statute that prohibits significant change, but there is an ability to change some. And so we're curious what the state does. Private plan premium, same thing. The vast majority of private plan carriers gave everybody a 1-year rate guarantee. We know of one carrier that in some cases was offering a longer rate guarantee, but that was rare. So you're likely going to get some change in your private plan premium, up, down, same. We'll see. Everybody was kind of guessing in that first year. And we also may see change in the benefit caps. So what, does the state plan itself, the design of the plan, is that going to change? There was a new bill that just got signed into Colorado state law on April 11th that specifically addresses the coordination of family payments with work comp. So if work comp does not directly roll up to you in your organization, I would suggest you coordinate with your risk management team, CFO, whomever is responsible for work comp, certainly your advisors, to make sure you're addressing that coordination appropriately.
And Courtney, just to chime in, this is Rich. I'm
Yes.
going to post a quick paragraph right out of the bill itself, just that kind of summarizes the main change that it had, so everyone's aware.
Great, thank you. If you have gone private, I would do everything you possibly can at this next renewal to negotiate a multi-year family rate guarantee with your carrier. They're going to be more willing to do that if you have other lines of coverage with them. So if you also have life insurance or disability insurance with the carrier providing your family, and they're willing to give you 3 years there, try to get that family rate guarantee to match. That way you don't have to worry about rate changes for a longer period of time. And then lastly, if you don't love what you're doing, Jessica alluded to this before, if you went with the state and you don't love it, you can go private. Conversely, if you went private and you don't love it, you can change carriers, you can self-fund it, or you can go over to the state. And we're going to talk about how those transitions happen on our last slide. But before I do that, I do see a couple more comments in the chat. What do we have?
There's a question from Liz. Thanks, Liz, that I can answer, and it was a good question. Can an employee use family benefits more than once, or do they just get 12 weeks in a rolling forward year? So assuming the employee is eligible, the way it works is measured forward, they would get up to 12 paid weeks of family, up to 12 paid and potentially protected weeks of family benefits in a benefit year across all leave types cumulatively. However, if they experience pregnancy related complications, they get a +4. So there'd be 16 weeks between all leave types in an established year. Now they're just to not to throw a wrench in it and cause concern for anyone, but piggybacking off of Courtney's mention that an employee technically doesn't need to file, though they may be strongly incentivized to file for family. They may choose to delay their family protection, take FMLA unpaid for leave reasons, and then use family. So unlikely, but technically nothing preventing an employee from doing that.
Thanks, Rich. All right, so I will kind of hit the high points on how you can transition your approach for 2025, and then hopefully leave time for some questions. So if you're private now and you want to go with the state, you can. The two big things you need to know are bolded here. The first is that you got to tell the state that you're going to do that at least 30 days before you do it. And then ideally tell your employees too. But the catch is at the very bottom. If you do that, you have to stay with the state for a minimum of 3-year commitment. They don't want you bouncing in and out. Now, if you're with the state now and want to leave, you can do that. But if you leave and then come back, like this example shows, it is a minimum 3-year commitment, and that's to keep the state program as solvent as possible and avoid the adverse selection of folks jumping in and out. Conversely, if you're with the state plan today and you're not loving it, you can certainly entertain a private plan for 2025, or really sooner than 2025. I'm just assuming that many of you renew on a calendar year basis. You will need to go through that private plan approval process that I alluded to earlier. There is no refund available to you. That deadline has come and gone, but certainly there might be other business and financial reasons to do so. Just give yourself some time to get that approval. The state was approving them pretty quickly last year, but it could take up to 60 days, they say, to give you that approval. And then you can move forward with implementing that program and notifying your employees. If you want to go the self-funded route, again, not as common, but certainly an option, there's an extra step for you, and that's to obtain that surety bond, which is essentially equal to 1 year of the premium equivalent. That's just an insured bond to say, yes, you've got the money and you're able to pay claims. So those are the couple of transitional comments to be thinking about. I guess at this point, I know we touched on some of the questions that came in ahead of time, but there was one, and I see we do have, if she's still on the line, I see we have Deidre from the city of Greeley on the line. And Deidre, I'm going to assume you might have been the one that asked about the state and local government opt-out. And so I thought, Rich, since we've got that employer on the line, maybe you could quickly touch on that uniqueness, since I think that question came in ahead of time.
Yes, absolutely. And I'm going to be super transparent and say that, well, one, new guidance has just come out. The state has just put some new guidance on their site around this situation. And two, you know, not every client we support is local government. So I personally am going to pull up those new details. I'll also drop them in our chat before I start reading through them, and we'll quickly talk through it. Oh, well, I just copy and pasted the same thing I pasted before. So I'll go ahead and read through them and then I'll paste it.
All good.
So here we go. Let me go ahead and here we go. So if you work for a local government employer that's opted out, you would still have the right to take family leave as an employee. So just like self-employed workers, you have to commit to reporting wages, paying premiums for a minimum of 3 years. So essentially for employees of local government who have chosen, when the local government employer has chosen to opt out, you go the path of a self-employed individual, if you will. So you would choose to voluntarily opt in for 3 years. You would need to register via the My Family Plus employer portal as an employee of an opted out local government.
Really?
Yeah, he's rock solid. I think he's more of a technical.
Oh.
He's an engineer, but he's really solid.
Can everyone still hear me okay? Just
I'll
wanna
help
make sure.
you guys.
For sure.
Yeah.
I mean, I got no beef with it for sure. I think he might get the word out for 2 months to do it.
Please put, whoever it is, please put your phone on mute unless you are talking or asking a question. And I cannot see.
Thanks, Aaron.
I'll see if I can find
I
that.
think we have somebody who is off mute, but I'll go ahead and keep going.
Okay.
So in essence, if you choose to voluntarily opt in for 3 years of coverage, you would need to register as a self-employed individual via the portal, submit